An open drive explained. It's very simple. It starts at the cash session. Okay, that's the first most important thing to understand. An open drive comes on the cash. Okay, it is the open of the cash market, and what this is in basic sense is big time frame players. Okay, whether it's an institution, a bank, a fund, whatever it might be, they've made the decision that when the liquidity is being provided, i.e., at the cash open, they are going to either buy or sell the market. Okay, so it's a decision taken before the market open. Now, the reason they wait for the cash market obviously makes sense. There's a lot more liquidity being provided. Okay, now if you're a big time frame player and you've got a big position, think 5,000, 10,000, 20,000, 100,000 contracts, whether it's for speculation, hedging, whatever the reason might be, if you've got that large position, you need the liquidity to execute it in. Okay, so they come to the market at the open. That's the important thing. It comes on the open of the cash session. Now, note, you get two different types of liquidity, takers and providers in essence. Okay, some people provide liquidity to the market, which are market makers, algorithms, us as day traders, and then you also get liquidity takers. Okay, these are someone coming to the market looking for liquidity and being more aggressive, lifting bids, hitting. Lifting offers, hitting bids. Okay, so there's a key differentiation there. You need to notice that when the market is in an open drive, we have got very much someone looking for liquidity. So we have a liquidity taker in the market. Okay, now the most important, the reason we try and define it in terms of takers and providers is that when there is an open drive, all right, the degree of the move is all dependent on how much liquidity is provided. Okay, listen carefully. So in other words, the market will move very aggressively or less aggressively depending on the liquidity provided. Okay, and that's the key. Sometimes you'll come in the market and the market will literally open, drive up, form a little bit of a flag, and then go again. Okay, in this instance, we have liquidity takers but very few liquidity providers. Right, in the second instance, where the market drives, pull back, has a crack again, deep pull back, has a crack again, deep pull back. Same trade strategy, but in this instance there's a lot more liquidity being provided. The premise remains the same, which is that the market continues towards the upside direction. The key differentiation is in the price action. That's what I'm going to show you when we get to the footprint. I'm going to show you two different examples. Okay, I think yesterday was a lot more of a straight line drive type open drive, whereas today probably more of a liquidity being provided. Again, probably not the two best opposite examples, but you'll get the gist of it when I show you the footprints in a minute. Now, what's very important to understand, you're looking at three distinct variables here. One, you need to be aware of the delta accumulating in both examples. Okay, the delta ultimately tells you how aggressive these takers are. All right, so if there is a high delta, right, it's telling us or telling you in these examples, number 1 and 2, prices going up, is telling you that buyers are very aggressively lifting the offers. Okay, now if you combine delta with price, that will ultimately tell you the nature of the open drive. Okay, bear with me for 1 sec. In other words, if we see in the first instinct move, okay, 2,000 positive delta combined with a 20 tick change in price, okay, that's very different to a 2k delta and only a 10 tick change in price. Okay, the important differentiation is in the first example. Right, we're likely to get a very aggressive continuation of the momentum. In the second example, we're likely to get a continuation, but it's going to be far more staggered, far more grinding, far more liquidity being provided. Okay, that's the first key reason why we use the footprint, because we can very quickly differentiate between the type of open drive. Now, volume speaks for itself. Okay, in an open drive, one of the key identifiers is there has to be a large amount of volume. Okay, if you don't have a large amount of volume, it's more than likely that you actually just have a little bit of a false move. In other words, someone's come in to buy the market, but there's no offer being provided. Okay, so you need to see a high amount of volume, because that high amount of volume is showing you, it's telling you those big time frame participants are actually there. Okay, and as we said there, the waves are determined by the liquidity provision. So the more liquidity provided, the more staggered the open drive will be. The less liquidity provided, obviously, the more directional the open trade will be. Okay, the example used, S&P 500 from the 17th, okay, and again from today, the 18th of September. Let's get into that example now. Let's have a look at what it looks like, and then we can really start to see how this played out. Okay, so what we've got here is the footprint. In fact, I'm going to start off on the profile, and I can show you what it looks like. So our first profile here is the yesterday. Okay, I'm just going to separate the open drive so you can see it quite nicely. Alright, so we can see market opens almost at the extreme. Okay, this is very typical of an open drive. The market's always going to have a tendency to open and drive. Okay, if the market opens, tests higher first, tests in value, that's not an open drive. It needs to open and drive. Okay, so we got the open, ticks 2 ticks up, and drives lower. Next, C print comes in. Okay, so half an hour rotations, we see the C print come in, and again, continuation, and we see the D print come in. Okay, and continuation. Right, so we see beautiful directional continuation in the market. Originally, we see quite a bit of directional change, and then we see the liquidity being provided. Okay. Now, the real key takeaway from an open drive, and this is why we focus so much on it as a strategy, is that if you miss the first move, that's fine. But when there's an open drive in the market, i.e. these big tails, make sure you're aware of them, because very often, high probability, the market's going to continue in that direction for the rest of the session. Okay, and that's what we got here. We got a continuation of that downdraft throughout the session in the E-mini S&P 500 yesterday. Okay, so our key variable, B-tail, opens at the high. We see the aggression early on until it runs into liquidity. Okay, we make sure we don't fade this until that tail is filled out. In other words, this becomes null and void only once that B-print tail is traded out. Okay, so that's yesterday. Now let's look at today. Again, B-print opens on the almost extreme low price. We get the drive. Okay, notice the size of the drive. Yesterday, we went from 04s to 10s, 6.5 handles. Today, we went from 97s to 07s, 10 handle. Okay, really aggressive intentional drive. C-print. Okay, again, continuation, D-print, continuation, E-print. Now notice the difference. I just want to open this up quickly and stagger this a little bit. Okay, compare the BCD print to today's BCD print. Okay, notice how little overlap there was between the BC and D print yesterday, and how much overlap there was between the BC and D print today. Okay, both markets opened inside of the previous day's value. So again, in terms of these opens, they both open drives. One's a lot more directional, the other one's a lot more grinding, both offering the same opportunity. Now remember what I said to you. Looking at today, this is the 19th, it's obviously 4 o'clock in the afternoon. So long as this B low holds, this S&P is likely to keep drifting higher and higher. Okay? Any pullback should be looked to be bought, and we should be looking to target continued upside prices. Okay, so that's what it looks like on a footprint. Now, let's have a look what it looks like on the on the profile. Let's have a look what it looks like on the footprints now. So, what I really like on the footprints, a little trick. Okay, I obviously share all these little tricks with you guys in the footprint course, but one of the key tools to have is this beautiful little histogram bar here. Okay, because it shows us nice relative delta. Now, what you can see on the open, it's always very good. It's very obvious if you have this for the opens. But what you can see on the open is that we get straight negative delta from the gun. Okay, so 1700 delta negative straight away in the first 5-minute rotation. Another 1200, another 3000. Okay, so off the open market opens, this is yesterday obviously, the 17th of September. We opened 2910 straight away down to 2905. Okay, we trade a good 6,000 delta. Market then consolidates. Okay, so we get the sideways trade, sideways trade, sideways trade. Look at the liquidity, and this is that liquidity I'm telling you about. Look at the liquidity being provided here from 04s all the way up to 06.5. Okay, lots of liquidity being provided. Now notice what happens every time the market does go bid up. What does the volume do? Okay, what does the delta do? Very, very low. So every time it goes down, we see very aggressive selling. Every time it goes up, we see very light buying. In other words, we see selling, the selling stops, they allow the buyers to buy it back up, and then they initiate that sell again, and we see the 3,000. The buying starts, positive, and then another 2,700. The selling stops. Why? Because they find liquidity, another 500 up, and bang, straight back down. a little bit of buying, and bang, 1,000 down. Okay. Eventually, the buying stops, and the open drive order continues, and we get another flush from 29.04 all the way down to 28.99. Again, 4,000 delta, 1,200 delta. Okay, so that's the real key takeaway. It's very intentional. Think of it as a Goldman Sachs sitting there. They got 20,000 contracts. They're going to sell because they have to fill the order. The moment they can find someone to buy it, they'll ease off a little, and they'll let that buyer buy it from them. Right? But once that liquidity stops being provided, bang, Goldman has to go again. Right? And that's what you're seeing in the delta. You're seeing that initiative being taken from the get-go, from the open. Now, let's go and have a look at today's one, because today's one is equally interesting, and it looks as good actually. And there's a lot of lessons we can obviously learn from these examples. So let's quickly go to today's one. Bear with me for one sec. Okay. And okay. Auto scale. There we go. Okay. So today, let's see. Straight away, bang. 230 opens. What do we see? 2,008 on a positive. 4,000. 2,000. Straight away on the open. Almost the complete opposite of what we saw yesterday. Okay, not only that, look what we see in the first rotation. Lots of imbalance here. Okay, imbalance is just simply bid versus offer, bid versus offer. Okay, I deal with that quite exclusively in the course. Market eventually finds liquidity. Where does it find liquidity? 04s to 06.5. Ding, ding, ding. Now, if you're paying attention, you'll see these purple lines here. Now, note those purple lines is the exact same area that we saw the buyers providing liquidity at the start of yesterday's session. Okay, so what are we seeing now? Now we're seeing sellers provide liquidity in that area. Okay, so the buying comes, we see a little bit of selling, and the sellers back off. Again, the buyers step back in. Okay, so that area from yesterday, 4s to 6.5s, where that liquidity was provided on the open drive, acted as initial resistance in today's session. Once it got catapulted, it got above it, and then ding, 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 what does it use? 04s to 06s is now turned into key support. Don't be surprised if by the end of the day this market fails to get back below 4s to 6.5s. Okay, the markets remember these areas where liquidity was provided, where liquidity was taken, and it uses them for future reference. Okay, fantastic example. As you can see now, we've got a positive 16,000 delta, almost a carbon copy play of yesterday. Okay, no real difference between yesterday's open drive and today's drive, other than the fact that yesterday was down and today's up. Okay, so what you can expect now for the rest of the session, expect those 6.5s all the way down to 5.5s to hold. Don't be afraid to buy it there. Okay, don't stand in the way of it. That's the real lesson today, guys. If you don't believe in the strategy of an open drive, that's cool. That's fine. I'm not trying to get you to adopt the strategy. But if there's one little piece of wisdom I can give you, sometimes knowing about a trade strategy can actually prevent you from making a bad trade strategy. Okay, keep that in the back of your mind, analyze these two, have a look at them, and hopefully they can add some value to your guys' trading going forward.